Our next guest thinks the bottom's actually in. Ed Yardeni is the president of Yardeni Research. He joins us now. Welcome back. That was your big call this week, right? And you feel like you're going to stick by that?
Yeah, I think I am going to stick by it. I've been whipped around quite a bit, along with the various comments being made by the president. But basically, I've stuck with my 7,700 S&P 500 by the end of the year, and I had been thinking that we could get a 10 to 15% correction, and the S&P 500 dropped 9%. But there's an exit ramp. That's what the markets were looking for. They at first were very concerned that this could be an endless war. There's no obvious way out, and the obvious way out was the president to declare that we won and get out, and that's effectively what he did in his speech last night, and that's what all the reports were coming out on Tuesday. So I think Monday was the bottom. Yes.
What if oil prices remain elevated, even if it's not a long conflict?
Well, I think the price of oil, if it remains elevated around these levels, I think the U.S. Economy can withstand it. As a matter of fact, there's a positive impact on the U.S. oil industry because we are exporters of oil and gas. So it would be tougher for some of the countries overseas. But I think one way or another, the oil is going to come out of the Persian Gulf. At first, the first reaction was 20 million barrels a day aren't going to come out. And then it was recognized that there's some pipelines that could make a difference, and that there's lots of other oil that's still floating around. So suddenly, instead of 20 million, we're 10 million barrels short. But now there's news that Iran and Oman are discussing sort of just coordinating traffic going through the strait and kind of scheduling things. They seem to be backing off the idea that they're going to be toll takers. I mean, there's going to be a tremendous amount of pressure on Iran to just behave. And by the way, we got another 2 to 3 weeks of pounding them. Scott, I remember I was sitting with you on Liberation Day, a few days after Liberation Day on April 9th, and there was 3 o'clock in the afternoon, and the market just went up 10% when Trump postponed Liberation Day. I think we got the same phenomenon going on right now. He basically has postponed Obliteration Day. He's still threatening to take out their power plants, but just postponing worst-case scenarios have been very bullish for the market.
You feel like this tech comeback has legs now?
Absolutely. I think tech got not cheap, but relatively cheap again. And I thought on December 7th it was time to underweight the Magnificent Seven. A few days ago, I said, hey, look, this PE's gone down from like 31 down to 25. It actually got down to 22 over the past couple of days. But I went back to market weight on the Magnificent Seven. And tech, I think, also got relatively cheap. So the short answer is yes.